Good morning, everyone. I'm Martha Stokes. I'm a chartered market technician, buy side retired, and I love to share some ideas with you because I'd like you to be more consistently successful and have a better opportunity to make more money in the market because it is an important aspect of being profitable and having the lifestyle that you want in America nowadays. I just checked our birth rate and I checked our immigration, and I checked the status of our country's growth as far as population, and it is declining. All of those are declining. So we will be focusing more and more activity in the stock market. And since we're international and we have the largest stock market in the world, bar none, and the safest, the world trades our market. We have the top 1,000 companies, Fortune 1000 companies in the world. Nothing even comes close to us in any other country. So we dominate in the financial markets, all of them, and the stock market in particular. And so the world trades our market. So we will always have opportunities for our stock market to succeed and our corporations to sell to countries who do not have a declining population pyramid. We're inverted. And so there's more emphasis on investing in retirement, in making money in your retirement, because a lot of people are finding out that they just can't do it even with a good 401k. They have to lower their expectations of how they're going to live. And with inflation rising, and it should continue to rise probably, uh, based on all kinds of different factors, as A&I takes over more and more jobs, there will be more people who are finding it more difficult to get a job, not because there aren't jobs out there, but because they are not qualified. We're going to have a lot of people retrained, go back to college and get different degrees and so on and so forth, so that they can have jobs in the new economy. We are a digital-based or financial services-based economy. And so what you learn here today with me will help you grow and help you understand where all the opportunities are at. I've been touting swing trading for many years on Quora and other places, and I was really delighted to hear that now most people are swing trading rather than day trading. That is awesome because there's far more money in swing trading than day trading. Day trading is very high risk. The shorter you hold the stock, the higher your risk, and it's exponential. The longer you hold it, the lower your risk. And a lot of you may be kind of risk averse. You should do a stress test on your risk tolerance and determine just how much risk you can handle, and then always trade within the risk parameters of your personality. Some people like to take really high risk, and I guess it doesn't matter when they take big losses, but a lot of people don't want to feel that way because it's like a vacuum cleaner sucking your guts out, and it's not a good feeling. It just feels awful when you see you have taken a massive loss on your capital, and it can happen really quickly. So today I want to introduce to you my uh, discovery many years ago when dark pools went to the ATS venues and were hidden. And that's about 2005 when that started. There's over 50 ATS venues today. They are run mostly by big banks and ATS venue companies. And the buy side institutions, the giant top 20 or 25, do all their activity off the exchanges. It's off the exchange. There's no way you can get in there. HFTs tried to sneak in, and SEC slapped them really hard. And now they are totally banned from that. They can't get in. HFTs do trade the public markets, and that's where we see a lot of their gap ups. So we have a huge gap up right here from down here all the way up here on this IDXX. IDXX is a pricey stock, but some of you may find that you can afford to do this stock as well. What I call this is dark pool buy zones. We had a bottom. It came down. It found its lowest low. It accelerated up because this price was well below the fundamental values, which were over here. So the fundamental values were right in here. So it moved right back up into the fundamental zone. You will see that I've been talking about fundamental zones and buy zones, which I call them most of the time buy zones. There's the low of your buy zone. There's the high of your buy zone. And you can see that that collectively includes all of this data, or most of it. And when it gaps up, then the dark pools pause their orders. They go to quantitative easing. They study the stock. They study the company. They study the fundamentals. They own a lot of the stock, or they may be accumulating this stock. It shows that they were in accumulation mode going on with lower than average volume because they can spend 10 or 15 days quietly accumulating a million, 2 million, 5 million, 10 million shares, or go directly to the company and buy directly the shares of stock from the company itself. And that's why sometimes the percentage of shares held by institutions is over 100, because they have actually purchased stock directly from the corporation. They can do that anytime they want. And so what we does appear in the charts, and what we have is a buy zone, or what I call a platform. The platforms often last about 3 months, which this one did. And this one is lasting a little bit longer, and then it gapped up on the news. So who gaps it? HFTs gap it. Who is in the mix here? Pro traders with the really small nudges and activities, but the control is with the dark pools. If it drops below their buy zone level to trigger the buy, they will move it back up, or pro traders will nudge it back up into that buy zone. Usually it's the buy side will buy and push it back up, but go no further. If it hits the high of this range, their TWAP orders, they don't use VWAP because that accelerates the selling or buying. They don't want to do that. They want to have time weighted at average price. They are timing when their orders trigger and fill. So time weighted at price is a superior professional order type, not available to you, but you can track it and you can follow it and you can use it on your trading. These platforms offer a wonderful opportunity to do position hold trading. I call it position hold trading because there's positional trading, which is a pivotal point strategy for swing trading. This is not swing trading. This is holding for a longer period of time. It's excellent for people who have a job and are trying to trade as well, because you can place your order and you can hold it for several months and the price continues up. As the price moves up, it will start accelerating and eventually become a swing trade. And there's lots of opportunities for swing trading with these. But this is a platform right now. It's building. And as it builds and the fundamentals improve, then it gaps up to the next level with the HFTs on the earnings news. It's a breakaway gap. It's not going to fill, highly unlikely to fill. There's no absolutes. And then another sideways pattern will occur if the dark pools deem that the fundamentals have improved and are up here, which they should on this one because they did improve. So over time, it's slowly moving up, slowly moving up. If you're coming from long-term investing and you haven't done this before and it's pretty scary to swing trade, start with platform position trading, because it will allow you to hold the stock, but you can sell it. And I can assure you that if you hold the stock for several months and it increases in value, that your rate of return is far superior to even swing trading. So for those of you who are busy, who are working, or who just don't want to sit and be at the terminal all the time, this is an alternative. It's also an alternative when we have a market like we have that's uncertain and unstable and we're worried about it and everybody's scared and it's up one day and down one day and up one day and your swing trading is getting whacked. Then shift to platform position trading, position hold trading, because the platforms are a stable place and they will ping, and you will see that it pings. If it goes too low, it pings and moves it up. If it goes too high, they stop trading. It's an excellent way for low risk, or people who are just starting out, or people who are really busy, don't have time, and but still want to make short-term income short-term in the market. So that's my topic for the day. I hope you learned a lot and that you trade wisely. There's alternatives to everything that you do. There's many new ways and many opportunities that you can trade the market, make extra income, regardless of whether you're working or retired or working from home or a parent staying at home with their kids, whatever. You have opportunities in the market that you just don't know about yet. I'm trying to present them to you so that you can consider them and take advantage of them because they are really important. These are extremely reliable consolidation patterns that are a buy zone. They're very, very consistent and reliable. I'm Martha Stokes, and that's my topic for today.